Good as always to have you with us on a Monday afternoon. So let's start with the best performers. And of course, Egypt continues to gain some traction, getting investors back into the country, up by 4.2% in dollar terms last week. Is it still the political story that's driving the markets there?
Some very positive moves which were made by the elected president to sort of reduce the impact or the participation of the army in the economy were taken quite well by the markets, and it also paved the way for many foreign investors to actually come into the market. Incidentally, at the beginning of last week, Qatar did sign an agreement to give them $6 billion to sort of bolster government finances, and the IMF is still looking to send them some money as well, though that's rumored to likely come in larger than the $3.2 billion that they were looking at. So all of this news coming to the market at the same time conspired for some very good performance.
So of course an improvement, but you know, Egypt's market was one of those that had the double whammy with the 2008-2009 financial crisis and then of course the political crisis. So how much lost ground does it still need to make up?
Well, from these levels, we're still looking to put on another 30 to 40% in US dollar terms before we actually get ourselves back to pre-2008 sort of levels. So a lot of ground to be made up, but obviously from an investment point of view, it does make for a very interesting entry point. And a lot of people have been looking at the market in its current form to try and take positions there.
A lot of people, you're saying Momentum's clients right now, very interested in the prospects and opportunities in Egypt.
I think you get a lot of people who are looking for African exposure. They tend to look at Pan-Africa, not just focusing on sub-Saharan Africa. So to that extent, Egypt becomes particularly exciting because after South Africa, it is the second largest stock market by market cap. And a lot of people look at that as opportunity. And last week, again, we did see quite a number of results come through from the businesses there. They're actually starting to do well or to recover from the difficult periods in which they'd actually been in.
So where are we seeing the most attractive entry points? Where are you seeing, in terms of the results that we've come through and seeing opportunities to buy there?
Based on the numbers that came through last week, Orascom Telecom had a very strong second quarter, and that does remain attractive. We are seeing them grow their earnings faster than they're growing their revenue, and they're managing to contain costs, which has been met quite well by investors. I think the stock was up about 4.2 or 4.3% for the week. We also saw some of the banks reporting their numbers as well. And again, that recovery is starting to show in the numbers that these companies are putting through, which is all very exciting.
So all in all, positive signs there. Ghana's market also reaching one of the top performers, up 1.3% in dollar terms. Anything to take out of that performance?
The bulk of that was the move in the cedi that strengthened about 0.8% against the US dollar. So that obviously transferred into the numbers you saw for the stocks. The market itself was fairly quiet. We didn't see that many volumes actually go through. Total Ghana was probably the one that earned the most mention, but even then it was up by less than 1%.
Okay, so not much to talk about BRVM also, but not much stock movement really there to excite anyone. On the other end of the spectrum, always we've got some of the worst performers. The Lusaka Stock Exchange, of course, worst performer, one of the worst performers, down 1.25%. And it seems that Zam Sugar taking a lot of pain right now. Investors also not happy with the lack of strong dividends coming forward. What's going on there?
At the beginning of last week, I think Zam Sugar invited shareholders, local shareholders, to just come and have a discussion and update on the business. And one of the things that was clear from the investing public is the fact that they do not feel that they're getting enough dividends being paid out. And by enough, I mean to meet their expectations. The company has come across some cash flow issues in recent times. The debt cost that they have on the books is actually much higher than it was in the previous year, I think up some 22%, and that obviously comes back to negatively impact on how much they have to pay out in terms of dividends. So a lot of shareholders have decided to take a bit of profit, so we've seen that stock price come down, bearing in mind, however, that it was on a bit of a tear earlier on in the year, so there is some element of profit taking.
Gaborone, down 1.75%. That's of course in Botswana. Also weakness in the currency. But in terms of buying opportunities with the market falling back on the week, would you say any good entry points for this week?
Botswana always has quite some interesting opportunities for one to participate in. Liquidity remains the issue. Some of the banks are actually looking quite attractive at the levels that they're trading at the moment, not least of which FNB Botswana. So there is always some interest there, and Letshego continues to be an attractive business.
But if, say you're a South African investor, you want to get exposure to FNB's growth story. Do you go FNB Namibia? Do you go FNB Botswana? Or do you go FNB South Africa, where there's, of course, that liquidity?
It's a very good question, Sam. One of the things to consider is the fact that the individual country businesses are the ones that are listed, not so much the group business.
The group business.
So when you buy Botswana, you're buying exposure to the Botswana
and of course the
business.
Botswanan economy.
Correct. So I think once one has got comfortable with the respective economies, they can then make a choice on from that point. Liquidity does remain an issue. Even in Namibia, it's an issue. But ultimately, if one is patient and takes their time to enter these positions, I think they'll come out well. Another
interesting market, of course, the largest in sub-Saharan Africa outside of South Africa, of course, is Nigeria. It was down slightly on the week, down by around 0.5%. Overall, though, it's up 11% on the year. Your thoughts on the performance of Nigeria's market right now? Of course, taking into account the massive weighting that banks have.
As you rightly point out, the banks do make up almost 2/3 of the entire stock exchange. So to that extent, whatever plays out within the banks has impact on that index level. In the beginning of the year, we did see a lot of the ones that had been pounded quite badly in the previous year recover quite strongly. UBA was up in excess of 40%, and quite a number of other banks put in that good performance as well. The consumer companies, however, have also been showing some pretty decent performance. A lot of investors now are probably looking to take a bit of profit.
Which consumer companies? Because there's been a lot of cost pressure that we've seen eating into the margins of many consumer-related stocks.
Performance in the brewers in the year to date has actually been quite decent, in excess of 15%.
They've always been with high PEs, though. I mean, how much stronger can they get?
Quality comes at a price.
Yeah.
So I think, if you look at African markets, but also other emerging markets and frontier markets, you'll find that the better quality businesses do come on higher ratings. And I don't see those high PEs, high price to books going away anytime soon, unless there's some significant changes at the business. That doesn't mean, however, that you're buying them at the wrong time. So we have seen this performance come through. Volumes, however, have been quite low, not least of which because of the holidays that we're coming into. So it would be nice to see foreign investors return to the market at some stage and give those prices some life again.
It seems as the lull all round is plaguing markets right now. Before I let you go, perhaps a question for Oscar Nyema, the CEO of the Nigerian Stock Exchange. But from your perspective, if you could speculate, I mean, how well is the stock exchange doing towards reaching their target of becoming $1 trillion market cap? I mean, they're still below $40 billion right now.
We have seen them make significant changes in how the market is actually run, which has obviously been a positive move. The next step is to now get businesses that are not listed on the stock exchange, that have large capitalizations, to actually do that. And
i.e. the telecom stocks, and we know the story, right?
Telecoms, upstream oil and gas, there's quite a number of industries for them to choose from. But once they manage to do that, I think we will start to see that market cap number move in the right direction with respect to that target.
Of course, you have to make it attractive to list. Thank you so much for joining us today. Fungai Tarirah, Portfolio Manager at Momentum Asset Management.